In the early 1990s, George Soros correctly predicted major changes in the United Kingdom's financial system, particularly its vulnerability within the European Exchange Rate Mechanism, also known as the ERM. By analyzing macroeconomic indicators and sector weaknesses, specifically the banking sector's reliance on unsustainable interest rates, he made a historic $10 billion bet against the British pound. This trade, known as breaking the Bank of England, was driven by sector-level insight and remains one of the most iconic examples of industry-focused fundamental analysis in history. Understanding the sector a company operates in helps contextualize its performance. Even a strong company can underperform if its industry is in decline. Sector analysis helps investors compare companies within the same group, understand macroeconomic sensitivity, and identify emerging trends and risks. Sectors are broad segments of the economy, for example, technology, healthcare, and financials. Industries are more specific categories within sectors, for example, within technology, semiconductors, software, and IT services. Classification systems like the Global Industry Classification Standard, or GICS, are often used by analysts. Cyclicality considers whether the sector is cyclical, such as consumer discretionary, or defensive, such as utilities. Regulation refers to whether there are specific government controls or subsidies. Innovation pace addresses how fast the industry is evolving. Profit margins recognize that some industries are naturally more profitable due to lower competition or capital intensity. Industry research tools include industry reports, such as those from IBISWorld and Morningstar. Sector exchange-traded funds and benchmark indices are also useful resources. Additional tools include news, analyst commentary, and earnings transcripts, along with key financial ratios compared across industry peers. Before investing in a company, compare it to its peers within the same industry. Ask whether it is gaining or losing market share. Consider whether its margins are above or below the industry average. Evaluate how exposed it is to sector-specific risks. Industry analysis ensures you are not just buying a stock, you are buying into the economics of its entire ecosystem.